Happy Sunday, ladies and gentlemen, Allincrypto here, and welcome back, guys, for another jam-packed daily market update. In this one, we're going to take some time to look at what Tom Lee is saying around how he thinks the rest of this year is going to play out. We're going to break his video down into two parts that was conducted over on CNBC, where, first of all, he talks about his predictions for the stock market and is expecting from here a 4+% rally for the S&P 500. Now, the S&P made a new high. We looked yesterday that the Nasdaq made a new high. This is in line with our broader technical assessment of what's to come for the likes of the S&P and risk assets more broadly. You know, crypto is a beta of the S&P 500, more perhaps similar to the Nasdaq, a kind of more jumpy basket or a more kind of volatile basket, but even it's a beta of that. And then what we're going to be doing is looking at his prediction for the cryptocurrency markets for the remainder of this year with that macro kind of asset backdrop given. Very much aligns with our thinking. And of course, Tom Lee, not the drummer Tom Lee, but Tom Lee from Fundstrat. He now, of course, is the CEO of BMNR, so Bitmine Immersion Technologies, which is a DAT I actually own, Bitmine Immersion Technologies. And then we're going to take a look at what John Bollinger just said yesterday. Now, John Bollinger told us it's time to start paying attention soon to BTC. And he did post a BTC chart just over the past, it's been about 13 hours. And then we'll look at the week ahead. Certainly, as we have potential government shutdowns coming to an end, we shall see. There's no sort of clarity of that. I also know you've got a lot of company earnings coming out. So a lot to get into. Let's kick things off with Tom Lee's view of the S&P 500 and where it's going from here for the remainder of this year.
Government shutdown, tariff headaches. So why should investors be more bullish on risk assets, the market overall, than they were 6 months ago?
Well, John, even at the April lows, just to be clear, our S&P year-end target was 6,600. So we were still expecting explosive recovery in markets. But we are above that level. And, we're 10 weeks before the end of the year and the S&P is at 6,800. I think it's still a base case then for people to say that in just a typical year, the S&P should gain another 4%. That would put us over 7,000 into the end of the year. And I think that that's sort of the minimum. But because we've got the Fed cutting, and they started in September, they've been on pause all year. That only happened twice in the last 50 years, which is 1998 and 2024. I actually think the S&P, given the skepticism that's been plaguing this market all year, we could do far better than 4%.
A 4% rally for the S&P 500. Bitcoin would certainly appreciate, I believe, under that context or under that kind of a move. And we know that the S&P, we believe, is now in a new bull market, having engulfed its bear market, recovered from it. 20% plus pullback is considered a bear market for the traditional markets. It's entirely recovered that. And every time it's done that, going all the way back to the 1980s, it's actually rallied for a period of a year plus, being the sort of shortest time period post the recovery. And I think we're on for a similar thing, and we continue to get confirmation of that, despite government shutdowns, geopolitical tensions, whatever it may be. For me, of course, we pay attention to news headlines, but we're far more concerned with what the charts tell us, because they are an accurate representation, taking out all the noise of what people are doing with their money. And I think markets are the truth. That's my opinion. That's why I'm a technical analyst, and I very much could see what Tom Lee is suggesting playing out. If we drop to a sort of smaller time frame and we go to our more immediate structure, we'll maybe drop right down to the daily. This we did say could just squeeze for continuation. It's done that. It has gapped up a little bit. Maybe you get that close at the start of the week. We've got a lot of economic data or a potential reopening of the government taking place, but I think this is destined for higher prices. And he's talking about a 4% rally. We'll use this tool, although I'm not the biggest fan of it because it takes everything off. You're talking about an S&P at over 7,000, like he said. And of course, crypto is going to benefit from that context as an overperformer to the S&P 500. This is still an uptrend. This looks a little bit toppy, doesn't it? But I do think it can recover from it. It's hard to envision that the S&P is going to move 4% and Bitcoin isn't going to overperform. And that's going to bring us on to the second part of that. I'll speed it up, where Tom Lee is essentially talking about his predictions for Bitcoin in the crypto space. And he talks about post the liquidation events, what's to come moving forwards. And it's sad, really, because there's so much good things happening, or great things happening, sensational things happening, pinch me, I'm dreaming things happening for the crypto space. Meanwhile, a couple of weeks ago, retail got absolutely wiped due to leverage. And it's very sad to see. It was the largest liquidation event ever, $20 billion. FTX, I think, was 1.6 billion. And I think the sort of, it could have been the Lunar crash, or sorry, not the Lunar crash, the March 2020 crash was 1.2. It puts things into perspective, doesn't it? And actually, markets are good at taking money from the impatient, given to the patient. And after a sort of retail wrecking like that, usually it's not such a bad time to enter the markets. Let's listen to the second part of Tom Lee's overview for Bitcoin and the crypto space more broadly for the remainder of the year. And I think crypto's in a great place, looking certainly as far as the total market cap excluding Bitcoin looks to sort of break out into price discovery. And it's just a case of being patient. You know, as an investor, you've got time on your hands and you can make a lot of money doing not a lot. And that's what we try and do. And the problem with that is you have that time. It's up to you how you choose to use it. It can be your best friend or your worst enemy. I think somebody said that to me after a breakup. And that's very much the case. You know, you can use it wisely, or you can spend it staring at charts on a daily basis and focusing on those smaller time frames rather than the broader macro, which is what we try and analyze and assess. Let's dive into this second clip of Tom Lee.
Crypto had a huge deleveraging event on October 10th, and part of that was triggered by the escalating tensions with U.S. and China on tariffs and trade. That was the biggest liquidation event in 5 years for crypto. So there is still those ripple effects, 2 weeks later, that are plaguing the crypto market. But I think we're almost through that, because a measure like something called open interest for both Ethereum and Bitcoin are at record lows at a time when the technicals for both Bitcoin and Ethereum are flipping positive. So I think you're going to see a crypto rally into the end of the year. And it really does help to see JP Morgan say they're open to the idea of using crypto as collateral.
So that would align with what he's looking at for the S&P 500. Obviously, JP Morgan, the infamous JP Morgan as it relates to crypto, with Jamie Dimon likening Bitcoin to smoking and investing in it to smoking. It's essentially his firm is now accepting Bitcoin as collateral, which for some seems a little bit strange, a little bit hypocritical, but this is the world that we live in. This has just been continuation after continuation after continuation for Bitcoin, and we ultimately have a broader technical assessment. We've got lots of overlaying technical patterns that we could reaffirm. The biggest one being this sort of cup and handle that takes us to 306, and we think that all gets met. We think that your total market cap really is on the cusp of breaking out into price discovery. It ran into a key technical level again that coincided with the liquidation event, so on and so forth. It will get through there eventually. If you flip this on its head, you'd say this is about to break down. Down in this case is up, and I think we end up somewhere around $6 trillion for everything excluding Bitcoin. Today it's currently at 1.5. So I think there's a great time ahead of us, and I think we spoke about this when it came out. John Bollinger, who created the Bollinger Bands, was looking at a W bottom on the Bollinger Bands for ETH and Sol, but not Bitcoin, and said it's going to be time to pay attention soon. And he may have got that double bottom that he was talking about. And if we look at, let's do it. Let's for the sake of it, let's put the BBs on Bollinger Bands, and let's use a different chart that I've not drawn. In fact, we can use this one. I think I could just take these off. And this is the double bottom that he's looking at for Ethereum here. And this actually looks good. This looks like it's rounding off, and you're likely going to get a move out of that. He's been very right on these thus far. And Sol, we're also going to take a look at. Where is my Sol chart? Got so many charts that we pay attention to. Here we are, Solana. This is the double bottom he's talking about, and we are getting a move to the upside. And then he posts this in regards to Bitcoin. Potentially a similar thing, although not perfectly on your sort of double bottom. So you're at least going to get a relief rally. I think that's in line with everything that we've just spoken about and looked at. he's looking at this now, and you can see we're already starting to rally off of it. So that time to pay attention is nigh. It's now. And we've got an interesting week ahead of us. We've got the government shutdown. It's been going on for 26 days now. I think there's talks that Trump's actually paying out of his own pocket the military, and people are, there's been there's a conversation around that, I think. This could come to an end. Ultimately, it will. The reality is the government in the United States continues. That might have bullish repercussions in regards to crypto legislation. The week ahead, I'll take a quick look at with you guys. I don't think there's anything too spectacular. Fed rate decision, in fact. What am I talking about? They're expected to cut rates again. That could be fuel to the fire. ECB rates also looking to hold. And US PCEs and so on and so forth. US GDP expected to hold at 3.8. That's not bad at all. Bank of Japan rate decision, they're expected to hold at 0.5. People looking at that Japanese yen carry trade, and Bank of Canada expected to cut rates also. So the Fed is massively ahead. I just want to find out what companies we have earnings for, because I know there are earnings. I'll just find that whilst I've got you guys on here, just to get you really prepped for the week ahead. If we go down here, it is the 27th. Nothing on Monday, but then you've got the likes of PayPal, potential long in my opinion. Mondelez, obviously Hedera Governing Council member, so on and so forth. Microsoft. It's going to be a big week for earnings. Is this going to fuel what Tom Lee spoke about at the start? Quite possibly. Ladies and gentlemen, that's it from me. Do become a subscriber to the channel. Also go and follow me on other social medias. There is a Telegram group out there called Allincrypto that is not me, by the way. Do not give those individuals any money. These people are scamming people in my name. Please be careful. There's about 20,000 people in there. So if you can report that, please do so. That's it from me, guys. I'm going to love and leave you. Thanks, everyone, for watching. I'll see you all soon.